Today, I'm going to tell you about the mistake that almost every beginner in trading makes. Now, just imagine you get into trading for fast money and freedom, right? In the end, you lose everything just like that, in a snap, in just a couple of days. Why does this even happen? Because you don't understand how everything works here. Because trading is actually a pretty complex activity where you're competing with other traders, naturally, who want to get your money. If you think this is an easy way to make money, then you've already lost your money from the start. We've already lost. In this video, I'll go over 8 of the most serious mistakes that are guaranteed to wipe out your deposit. So I suggest watching until the end so you don't end up among that 95% of people who leave the market with absolutely nothing. The first thing that's very important to understand is that the market is no place for feelings. As soon as you start feeling joy from a profit or anger from a loss, that's it. You're losing money. Beginners often see trading as, some kind of gambling game, entering a trade just on some kind of adrenaline rush. That's actually the first sign of the wrong actions. Your decisions must be definitely calm and well-founded. And so if you open a position just because you feel like it, like as if the chart will definitely go up, then you're definitely making a mistake. Greed and the desire to hit the jackpot right here and right now prevent you from thinking clearly and seeing the real picture. You definitely start imagining, such a wealthy life already, new purchases. But the market is absolutely indifferent to your desires, like mortgages or some new smartphones. It moves by its own rules, and any attempt to impose your terms on it will inevitably lead to ruin. Why am I saying all this? Because many beginners, just starting out as traders, let's say, mistakenly believe that they are stronger than their feelings, right? That they can always remain cold-blooded when even some real big money is at stake. And you can be a successful specialist anywhere, but the exchange essentially will quickly show that in a stressful situation, the brain starts working completely differently. Either panic kicks in or some kind of mindless struggle with a chart. And so just to avoid this, it's necessary to create a system that won't allow you to make a mistake simply because of emotions. Essentially, you must act according to a pre-written scenario because, like any deviation from it, is exactly the direct path to losing your deposit. During trading, the less you overthink, the better your result becomes. Because all the analysis should happen even before you've opened your position. Anxiety, on the other hand, appears where there's no clarity or order. But if you know exactly what to do in any situation, then it simply has nothing to latch onto. And a successful trader is more like, such a, let's say, hunter who can just wait for hours or even days, for their perfect moment, but in the end, they wait for it. Composure is your most important resource, right? When you see the price, skyrocketing, and you're sitting there without a position, your brain naturally starts screaming at you that it's over, you missed the trade. You start feeling the FOMO effect. And that's the most dangerous moment when you're ready to, open a position just to end this kind of internal torture, so to speak. A professional trader, however, in such a situation will close the laptop and go grab a coffee because he knows that opportunities aren't going anywhere. Tomorrow, there will be new entry points anyway. But recovering lost money is much harder than waiting for a new signal. Psychological maturity is valued much higher, right, than knowing 1,000 tools or complex trading patterns, from technical analysis. You have to understand that you need to cultivate a cold executor within yourself, someone indifferent to the numbers on the screen until they've actually turned into a realized result, say at the end of the month. You should realize right away that it's a fairly long road, but it's the only one that leads to real success. At the very least, try, to stay unshakable in any situation, because that's, your only defense and the key to preserving your capital. The exchange, any exchange, is a place to make money through cold calculation, not for seeking thrills. If you just want to feel some kind of adrenaline rush, then you're better off doing extreme sports. Because in trading, intense emotions are, I think, definitely a sign of being an amateur. If trading has become boring, it means you finally stopped playing and started truly working. Actually, it's important to understand that even total composure won't save you, right? Because if you can't crunch the numbers or, limit your losses, well, nothing's gonna help. And before we move on to analyzing risk management mistakes, I'd like to invite you to my Telegram channel. And if you want trading to become, a conscious job for you rather than a guessing game, then what you need is proper live analytics. In the channel, I share breakdowns of real market situations and trading ideas that help you see the market. And for those who are, aiming for a truly serious result and want to trade along with me and our community, I'll leave the link in the description. So go ahead and subscribe. Now, let's continue. Every trade must have a precise mathematical calculation, right? It's vital to understand that you shouldn't open a position if you don't know the size of the potential loss in cash. Professional market work is built on essentially protecting the money you already have, your funds. Beginners often think only about profit and completely forget about safety. They risk their entire balance at once, which, leads to a fairly quick loss of all their savings. And here, the right approach is to limit the risk per single operation. Usually, I recommend doing it this way. If you're trading, let's say using martingale as a secondary strategy, then your initial position should be 1, at most 2% of the total account balance. A rule like this will let you survive a long series of losing trades without any, critical consequences. And these restrictions help to preserve your capital. Yeah, because when the price goes against your prediction, you always know that you have many steps to eventually cover those losses. You have to get used to the idea, also that losses are an inevitable part of business, any business for that matter. It's important that the size of the average loss is significantly smaller than the average profit. Only this kind of mindset allows the account to grow over the long run. Trading requires discipline and following risk management, I'd say, just, 100%. If you've closed a few trades at a loss, don't immediately start trying to win it all back. Trying to get even leads to even greater losses. Math is the only objective guide in this work, because the numbers on the balance sheet show the real effectiveness of your actions. You need to, I always advise doing this, keep a strict record of all expenses and income. Because capital is your working tool, you need to protect it from absolutely any unjustified risks. Without following the rules, success in the market is simply impossible. To trade, essentially, you don't need to know exactly why the price moved right at this moment, right? It can jump from any little noise. The main thing is to understand how it behaves on the chart right now and manage to profit from it. And quotes, essentially change because of the difference between supply and demand at any given moment. And so you must learn to determine the current direction of the price. Trading, for example, can go against the trend, and it can lead to a total loss quite easily. On the chart, you can notice certain price ranges within which the movement is most active and continuous. And these levels are exactly what's called, the support level, which is at the bottom, and the resistance level, which is at the top. They help you see the range in which the price moves without any interference. Global levels set the main direction for a long time, while local ones appear, within the day. And it's precisely by these boundaries that we see where the price might slow down, where it might reverse, and so on. On charts, you also often see the same movements that constantly repeat because all charts are, essentially cyclical. But you shouldn't think that it will always be this way. The market, even though it's cyclical, can change, and you need to be able to adapt to it in time rather than just relying on old patterns. And so understanding market phases allows you to choose the best moments to open positions. Sometimes the price is in a very narrow range, and at such times it's better to refrain from any trades. It happens that, for example, after a long lull, strong movements begin, but in reality, that doesn't always happen either. The price might just stay flat or start moving very sluggishly. So you shouldn't always expect some kind of, sudden surge. You should always keep a trading journal. Every single trade needs to be recorded in it. Records help you see the real picture of your wins and losses, because the brain tends to forget the bad times and exaggerate the good ones. And that's exactly where a trading journal brings you back to objective reality. You basically need to list the reasons for entry, the trade time, and the final result. Analyzing this data lets you find systemic errors in your work. Without, recording it, it's basically impossible to professionally track any of your actions. Statistics show which instruments are profitable and which ones are losing money. You'll be able to determine, the most effective hours for your trading, for example. A journal also builds discipline and accountability for every single click. You need to review your entries regularly and draw conclusions based on that. This really helps to eliminate random trades that might have just, been made emotionally. I'd also like to mention something very interesting, which is being overly trusting. It's probably the most subtle yet destructive flaw of beginners looking for knowledge online, because you're immediately thrust into a world of gurus showing flashy videos with expensive cars and huge profits on screenshots. You start believing this artificial image, thinking that these people actually know the secret to success. But the reality is, and I'm not talking about everyone, but most of them make money off of you, rather than the actual market. Their main goal is to sell you this dream and make you believe in this easy money, which, doesn't actually exist in trading. And unlike many other trader bloggers, I'm telling you the whole truth, exactly as it is. The real business of these teachers is selling useless courses and just getting you onto platforms through affiliate links. They'll show some popular indicator and say it's all super simple and that you'll be making millions, billions, and so on. But they only give you a tiny fraction of the truth, intentionally leaving out that the indicator doesn't work that simply. So you believe the slick editing and demo accounts, but in the end you just lose your money, making the people who invited you rich. And this is where the responsibility falls on you, because you have to learn to strictly verify any incoming information and never take anyone's word for it. I've said 100 times that nothing comes for free. Verify every claim yourself on a real chart, because most social media content is created just to grab attention. They're trying to use you as a resource, so be extremely careful. Your naivety is costing you way too much. And every time you see a golden rule of trading, ask yourself how the person saying it benefits. If they show you how billions are made in 10 minutes and tell you it's easy to do the same, it's just a pretty package. Real trading doesn't work like that. And that's why I'm all for honest analytics and a serious approach, rather than, fairy tales about how to make quick money. True knowledge isn't shown on cheap shows, because trading is hard, real intellectual work, not entertainment. And here, the choice is yours. Either listen to me, someone who talks about all this openly, or listen to people who will naturally try to convince you that everything will definitely happen for you right today. If you, for example, lost your capital by listening to some advice, you only have yourself to blame. Start thinking for yourself. Study the basics, essentially the primary sources, not questionable retellings and short 1-minute videos on shorts. The market's an aggressive environment where everyone wants to take your profit, and gullibility here naturally leads to a quick loss. You need to become, a skeptic and question absolutely everything that isn't confirmed by your personal experience and verified by statistics. There are no simple solutions in trading, otherwise everyone would have, become rich a long time ago. If you use the same tools as, a million other beginners, it's definitely going to be tough for you. You need to learn to see what is hidden from the eyes of the majority. To do this, you need to stop watching, entertainment content. Watch me. Start seriously studying market mechanics, because it's exactly this kind of approach that brings real income. Also, many people develop this blind faith in indicators. Although it's important to understand that indicators are just data that show us, the past, right? Not the future. And a huge number of beginners are mistaken when they believe that indicators can predict the next market movement. Yeah, essentially, you clutter your chart with many lines and wait for a signal, not realizing that almost all of them are inherently lagging. The price has already, made a move, and your indicator has only just shown like an entry point. As a result, you enter the trade too late. And this blind faith in standard settings is another serious problem that actually prevents many from earning, because the market is constantly changing, and what worked, yesterday, today might only bring losses. You must deeply understand the calculation logic of each indicator to be able to adjust it to, your current situation. For example, a popular one, RSI, often shows overbought at a value above 70, which in textbooks, for instance, is considered a sell signal. However, in a strong trend, the price can rise for a very long time while staying in the zone. And so, while you'll be losing money time and again trying to catch a reversal, indicators should be your assistants and filters, not the sole basis for making decisions. They don't replace an understanding of market mechanics and the ability to see price structure on a clean chart, right? Don't waste years searching for, the holy grail or the perfect indicator. Well, because it simply doesn't exist in nature. Yeah, it's better to take that energy and direct it towards studying price action logic, for example, as this knowledge is much more reliable than any lines. Try to, become a specialist in clean charts, right? And then indicators will become just a useful addition for you, not just a crutch that you're constantly relying on. Your success depends on your ability to interpret people's actions, not on formulas written decades ago. Like, I'll set the SMA to 1220, and so on. Big players know which indicators beginners use, and they often use those signals to actually lure the crowd into a trap. And so, if you want to be in the black, you have to be a step ahead and understand exactly what's behind every move. That's the only way you can make sound decisions and avoid falling into the nets set by the market. We also have my favorite, well, not really, over-the-counter trading, known as OTC. I've done more detailed breakdowns of it right here or here. It'll pop up now. You can watch separate videos where I explain why you shouldn't trade there. Essentially, OTC is a specific format of, let's say, quotes generated by the broker itself. Unlike the real market, the price here is formed by the company's internal algorithms, not by, say, trades from big banks or investment funds. This essentially creates a unique environment where global volumes and typical market liquidity are absent. In fact, you're actually interacting with a computer program whose rules can differ significantly from standard exchange processes. That's exactly why many classic technical analysis methods simply lose their effectiveness in such conditions. Strategies that have been profitable for years on real charts. The main danger is that risks here are practically impossible to calculate in the usual way. Most often, beginners come to OTC charts on weekends, when official global markets are closed. This happens because of an inability to stop in time and a desire to earn money around the clock. This kind of behavior is just gambling, which leads to simply unjustifiable losses. In trading, it's important to clearly understand the source of profit and control every step. On OTC charts, many dangers are hidden behind seemingly familiar price movements, which requires double the vigilance. Success depends on discipline and the ability to choose moments when the probability of a positive outcome is at its highest. There's no point in trading where the conditions are inherently set up to make your task harder. Quality rest is just as important a part of the job as the trading itself. If global financial centers are closed, a professional trader just stops, turns off the computer, and attends to personal matters. But this constant presence at the terminal leads to a definite buildup of fatigue and subsequent calculation errors. By resting, you restore the mental clarity that is your main tool for making the right decisions. And so sticking to a strict work schedule helps avoid, first of all, emotional burnout, and it also helps maintain a long-term focus on results, rather than having that, perpetually blurred vision. And if you've watched this video to the end, then I believe you're already ahead of many beginners. Use this knowledge to protect your capital and build your system on logic and calculation. I'd like to wish you luck in your operations. May your path to success be truly conscious and profitable. And in closing, I'd probably like to remind you once more, to join my Telegram channel, guys. There, you'll find a professional community and the kind of analytics that helps make trading systematic rather than random. And if you found this video helpful, then please give it a like. Be sure to share your opinion in the comments, your thoughts. I try to read them all. Thanks for watching, and I'll see you in the next one.